Ladies and gentlemen, Joe here, and what I'm about to show you will destroy everything you thought you knew about buying silver in America. Because right now, on March 18th, 2026, the most popular silver coin in the world is quietly robbing you blind. And nobody on financial television is warning you. Silver spot price today sits near $69 an ounce after the brutal March correction. But the American Silver Eagle, you are paying up to 25% over spot on a single coin. Let that number sink in. You hand over your cash, you walk out with silver, but almost a quarter of your money never bought any metal at all. It bought a sticker, a logo, a name. While the U.S. Mint suspended numismatic silver sales back on January 14th, 2026, dealers kept raising premiums. The crowd kept buying. The trap kept tightening. But here's the part nobody noticed. There are silver coins right now, legal tender, government minted, that carry premiums of 5 to 10%, not 25. Some are completely capital gains tax-free, some are sales tax exempt in your own state, and the silver inside them is identical to what's inside an eagle. Identical metal, different sticker, massive price gap. This is Financial Joe Alert. And in the next few minutes, I'm going to expose 3 things that change how you buy silver forever. Number 1, the hidden premium math that costs the average stacker thousands per year. Number 2, the exact legal tender coins that bypass capital gains tax completely. Number 3, the state-by-state silver tax map that even most dealers will never show you. This is not hype. This is not financial advice. This is the math the silver industry does not want you doing in front of your laptop. Now pay attention to this number. According to fine bullion prices in 2026, generic silver rounds carry a 5 to 10% premium. American Silver Eagles, 15 to 25%. That gap is your money. Walking out the door, forever. Let me show you exactly how brutal the math gets. Imagine you have $10,000. Silver is at $69 an ounce. If you buy American Silver Eagles at a 22% premium, you receive roughly 119 ounces of silver. But if you buy the same $10,000 in low premium rounds at a 7% premium, you walk away with roughly 135 ounces. Same money. 16 extra ounces of real metal. 16 ounces at $69 each. That's over $1,100 of pure silver. Lost. To a logo. And this is just on one purchase. Now stack that decision over 5 years, 10 years, a lifetime. This is how average buyers get trapped. They confuse popularity with value. But it gets worse, because while you were overpaying for Eagles, the U.S. Mint itself broke down. On January 14th, 2026, the U.S. Mint suspended sales of its silver numismatic products. Extreme volatility, rising silver prices. The official government mint of the United States froze. When products came back online, premiums had exploded. Eagles that once sold $2 to $4 over spot were now stacked with double-digit premiums. The mint that should be cheapest became one of the most expensive. But that was not the real problem. The real problem is what every other country was doing while America was overcharging its own citizens. Look at this carefully. The Royal Mint in the United Kingdom produces the Silver Britannia, 1 ounce of fine silver, legal tender, backed by the Crown. In the UK, the Britannia is exempt from capital gains tax, completely, because it carries legal tender value. Sell it at a profit. Pay 0 CGT. That single legal feature is worth more than any premium discount. Now think about what that means. A British investor buying Silver Britannias keeps 100% of their gains. An American buying Silver Eagles can owe up to 28% federal collectible tax on profits. Same silver, same 1 ounce weight. 2 completely different outcomes. This is the detail nobody noticed. And it gets deeper. The lowest premium coins ranking for 2026 puts the Silver Philharmonic at the very top, lowest premium tier, followed by Britannia, then Krugerrand, then Maple Leaf. The American Silver Eagle, not on the low premium list. This is not opinion. This is published 2026 market data. So while Americans line up to overpay, the rest of the world is quietly stacking cheaper, smarter, tax-free. But wait, the story gets worse for Eagle buyers. Because while you're paying that 25% premium, the physical silver market is screaming distress. Reuters reported the global silver market deficit will widen to 46.3 million ounces in 2026, the 6th consecutive year of structural deficit. 6 years of supply not meeting demand. J.P. Morgan Global Research sees silver averaging $81 per ounce in 2026, more than double its 2025 average. The Silver Institute's World Silver Survey 2026 confirms it. Industrial demand driven by electric vehicles, solar, AI infrastructure, a historic shift. The deficit is real. The shortage is real. And yet the average buyer is throwing away 20% of their capital on a sticker. This is where the trap gets deeper. Now, let me show you the second layer that almost nobody understands: sales tax. According to the Canem Bullion 2026 Sales Tax Guide, multiple U.S. states have removed sales tax on silver coins entirely: Alabama, Arizona, Texas, Florida, and more. But other states still charge full sales tax on certain silver products. And here's the trick: legal tender coins, coins with a face value, are often treated differently from privately minted rounds. In some states, only legal tender coins qualify for sales tax exemption. In others, the threshold is $1,000 per transaction. Above that, full exemption. If you buy the wrong coin in the wrong state, you can pay sales tax on top of an already inflated premium. Most people miss this completely, and this is where the silver industry stays silent. Because every time you overpay, somebody else gets richer. Now let me show you the coins that win this math. Option 1, 90% junk silver. Pre-1965 US dimes, quarters, half dollars. Real United States legal tender. Real silver. Often the lowest premium silver in the entire market. JM Bullion, SD Bullion, APMEX. All major dealers stock these in face value bags. A $1,000 face value bag holds approximately 715 ounces of silver. It is divisible, recognizable, and carries some of the lowest premiums available. Option 2, Silver Britannia, Royal Mint. Legal tender of the United Kingdom, CGT free for UK residents. Globally recognized, mid to low premium. Option 3, Silver Philharmonic, the lowest premium tier coin of 2026 according to Find Bullion prices. Option 4, Texas Silver Round, privately minted in Texas, which removed sales tax on precious metals. Combine that with a state-level capital gains repeal and you get one of the cleanest tax setups in the country. Option 5, generic 1-ounce silver rounds, 999 fine silver. 5 to 10% premium. Identical metal to Eagles, none of the markup. Every one of these options puts more silver in your hand for the same dollar, but there is something else nobody is telling you. While retail buyers chase Eagles, the smart money is going somewhere else entirely. Look at the data. For 15 consecutive months through early 2026, physical silver has been leaving COMEX warehouses at volumes the exchange has never processed. Real Clear Markets reported it. Kitco reported it. The vault drain is real. Registered silver inventory on COMEX hit a record low of around 80 million ounces against more than 400 million ounces of contract obligations. Rate that again. 80 million ounces of real metal, 400 million ounces of paper promises. This is the squeeze. And while institutions are demanding physical delivery in bars and kilos, retail buyers are still paying 25% premiums on individual Eagles. This is the gap. This is the trap. Now think about this logically. If you are stacking for the next leg of the silver bull market, what matters? Ounces in your hand, or the logo on the coin? JP Morgan says $81 average in 2026. Some analysts project even higher into 2027 as the structural deficit widens. Every extra ounce you own at today's prices is leverage on tomorrow's move. Every dollar lost to premium is leverage you will never get back. This is how average stackers fall behind, silently, quarter by quarter, coin by coin. But here is where the math turns brutal. Silver lease rates exploded in 2026. According to Trading Key, 1-month silver lease rates that normally sit at 0.3 to 0.5% spiked to around 8% in January. Some short tenor rates ran even higher. Bullion exchanges reported elevated 6 to 7% rates with brief spikes above that during February tightness. Lease rates this high mean physical silver is scarce. Borrowers are paying massive premiums just to access metal temporarily. When the physical market is this tight, every ounce you fail to buy because of overpriced premiums is an ounce somebody else will own. This is why your coin selection matters more right now than at any time in modern history. Pay attention to this part, because this is where most people lose money. The American Silver Eagle is one of the most beautiful coins ever produced. It is the most liquid silver coin in the world. There's a real argument for owning some Eagles for resale convenience and brand recognition, but there's no argument for stacking only Eagles. Diversify by premium, diversify by legal tender, diversify by tax treatment. Junk silver for divisibility and lowest premium. Britannias for the legal tender shield. Philharmonics for the cheapest entry. Texas rounds for state-level tax efficiency. Eagles for liquidity only, not for stacking weight. This is the silver stacker playbook that mainstream dealers will never advertise, because their margin lives inside that 25% Eagle premium. Now let me lock in the 4 insights you need to remember. 1. Premium is your real enemy. 5 to 10% versus 15 to 25% is the single biggest cost in stacking silver. 2. Legal tender coins like the Silver Britannia carry tax advantages that no privately minted round can match. 3. Sales tax exemption depends on your state and the type of coin. Choose wrong and you pay twice. 4. The structural silver deficit is in its 6th straight year. Every premium dollar wasted today is a dollar that will not compound when silver runs. The COMEX vaults are draining. The Shanghai vaults are draining. Lease rates are screaming. The deficit is widening. And you're paying 25% over spot for a sticker. Stop. Hit subscribe right now if you want me to keep exposing what dealers refuse to tell you. Smash that like button. Drop a comment with the coins you're stacking. I read every single one. I will never ask for your money. I will never push paid signals. I will never sell you a course. Just real numbers, real sources, real silver. Because the paper price says one thing, the empty vaults say something else. And the premium on your next coin is either building your future or quietly killing it. This is Financial Joe Alert. Stop buying the sticker, start buying the silver.